Welcome to your monthly market update. We have so much to cover and go over today. You guys are going to love all of the updates that we have to provide. So we are going to give you an update on what exactly is taking place in the market right now. We're also going to go over what is some of the changes that have been taking place with lending guidelines if you're interested in purchasing an investment property or maybe even a second home. And we're going to go over an update of what's taking place with the eviction and forbearance moratoriums as well. We're going to talk about where interest rates are at and what our predictions are moving forward with everything that's taking place right now. So be sure to stay tuned. Hey guys, this is Brandie with the Mathison-Klein group at Keller Williams Realty. If we have not met yet, we are going to dive right in. But before we do me a favor, just hit on the subscribe button real quick and also give us a thumbs up. That will really help, and it will give you detailed videos every Thursday about everything that's going on in the market right now. Did you guys know that there are currently 10 million people right now that are behind on their mortgage payment? 10 million people. And there's 2.7 million people that are currently in some type of mortgage forbearance. So just a little heads up on that. Now, an update on what's taking place with the forbearance moratorium. They have extended that out through till June 30th. And what that means when they're extending that out is basically mortgage companies can't call the note due or anything of that nature. And you also have until June 30th to file for a mortgage forbearance. So let's say, for example, that you are falling on hard times, you haven't filed for forbearance yet. You do have the opportunity to still file for that forbearance. And if you file before that June 30th, it's covered under the COVID Relief Act, and it also allows you the opportunity to, they'll work with you on not making your payments for 3-month increments and things of that nature. So just a heads up on that. They just also announced a moratorium, and they extended the deadline for the eviction moratorium. So tenants that have not been able to pay their rent, that also has been extended out through till June 30th as well. So what I feel is if they continue to kick this, and extend this moratorium out, in my opinion, a lot of instances, the problem is going to continue to get bigger. And the reason why I feel that way is because, people aren't making their mortgage payment right now. And the majority of people that are not making their payment also includes their escrows, which is their taxes and also their insurance. So let's just say, for example, that somebody hasn't been making their mortgage payment for the last 6 months. That means that they're also 6 months behind in their escrow account. And so that, the lender can agree, you know what, we're going to put this amount back on the backside of your loan. They can choose to work with you on that. But the money that is due as far as your escrows, that's going to be due. The mortgage company is not going to likely pay for the backed money that is due for your escrow account. So just keep that in mind. Let's move into what's taking place in the market right now. Let me just say this. Currently, right now in Lake County, we have less than a 1-month supply of inventory. In the history that they have been tracking inventory, we've never been this low. What this means, and honestly, if we were to really pinpoint it down into more microscopic areas, we really only have maybe 7 to 14 days worth of inventory in some cities. It's really, really crazy right now. So I'm going to share with you some of the stats of what's taking place and what's causing that. So I mentioned that we have 1-month supply of inventory. That is down 60% from this time last year. So this time last year, we had 60% more homes that were on the market than we do this year. Our pending inventory is up almost 21%. So that means that we have more buyers that are actually looking and purchasing homes right now in this market, and we have less inventory to choose from, which makes for a really, really competitive market. Now, I will say this. over the past couple of weeks, I've noticed a pause, just a slight pause as far as the craziness that we've been seeing. Part of that might be because we have started to see a slight uptick in interest rates and people maybe are pausing to see kind of what's taking place. So I don't know where that is going to lead to, but I'm just sharing with you the numbers that have just most recently come out. And these numbers are based off of the month of February. Currently right now, our average sale to list price is running 99%. So what that means is that sellers are not having to negotiate much, if at all, off of their asking price. In fact, what we're seeing right now is a lot of people are paying above asking price for homes because they're in a multiple offer situation, they're in bidding wars, and so what we're seeing is a lot of above asking price. And what we're also seeing is that people are not putting in appraisal contingencies. They're actually offering to pay several $1,000s over appraised value. That's what's taking place in the market right now. So in February of 2020, the average sales price was just under $269,000. Now, this year, in February of 2021, the average sales price is $305,500. That is almost a 14% increase year over year as far as increase in market values. I'm not sure about you guys, but I don't know where else you guys can find such an amazing return on your investment for also something that you use and that you are living in and that you need anyways. So let me just say that if you at all have been considering selling, now is definitely the time to consider doing that and letting us be able to have that conversation with you. I will say this, in South Lake County right now, I just checked the MLS, and we have less than 200 homes actively on the market right now. So that would be like the whole southern region of Lake County, less than 200 homes on the market. In the same region, we have about 475 homes that are currently under contract and due to close in probably the next 30, 40, 60 days, depending on when their actual closing dates are set for. So kind of like last year when we were in lockdown and we had a shortage of toilet paper, now we have a shortage of homes. Literally, it's very, very possible that we could get down to not having any other homes that are available on the market if we do not get more homes available for sale for people to purchase. Now, that is immediately predicated off of what's taking place with the interest rates, because interest rates are still at historical lows right now. I know I've been saying this for quite some time, but it's true. And even though interest rates have gone up very slightly since the beginning of the year, which we predicted that it would, currently right now you can get into a conventional or an FHA loan for right around 3.125 to 3.25% if you have excellent credit. So I just want you guys, go into mortgagecalculator.com or something along those lines and play with the numbers and see what a difference your payment would be if the interest rate just went up 0.5% or 1%. And that makes a huge difference. And there's a lot of people that are wondering, should I even get out there and bother buying a home right now in this market because it's so crazy? And yes, you should definitely consider doing that, because the interest rate that you're able to get into, if you are purchasing by getting a loan, should I say. Now, if you are considering purchasing with cash and you don't need to buy right now, it might make sense to just kind of hold off. However, being a cash buyer does put you in a little bit more of a driver's seat. Just try not to get too emotionally attached in case, you're not the highest bidder. So overall, interest rates are still amazingly hot. They're awesome. They're great. And that is one of the leading factors of what's creating this frenzy in our market right now. The other thing to keep in mind, if you were looking at either potentially purchasing an investment property or a second home, now this is the kicker. This really stinks. So as of April 1st, Fannie Mae is starting to limit the number of loans that they're going to buy back. So they went from buying back about 30%, 30% of basically their portfolio was second homes or investment loans. they are decreasing that from 30% down to 7%. In conjunction with that, they also are tightening their underwriting guidelines. So it's going to be more difficult to get an investment loan, or it's also going to be more difficult to get a second home loan. And I'm not exactly sure why they did that. Just know that, if you were to go and try to buy an investment property after April 1st, it's not going to be impossible. There's still going to be loans that are available. It's just going to there's going to be more strings attached. Your interest rate's probably going to be higher, all of those different things. So some other alternative options that you could consider would be to possibly do a home equity line of credit on your primary residence and pull out some of the cash or equity that you have in your home to then move forward with either purchasing that second home or purchasing an investment property, just as another option that you might want to explore and consider. So that's kind of what's going on right now in this really hot market. Things are moving very quickly, and if you want a little bit more information on the home equity line, and there's also information on doing bridge loans in case you are in that competitive market and you want to be a cash buyer instead of coming across as a buyer that is getting financing, you can check out that video as well. So stay tuned for next week. We've got some really important updates as well next week, and I hope you guys have a wonderful day.